Okay, let's jump into it. 10:48 a.m., 17th of October, and I'll try and sort of shoot this one out a little bit quicker because, of course, we've got a bit of Aussie data coming out in a bit, which is the first sort of real sort of bit of data in that we've sort of seen this week. Everything's been a little bit, like particularly through Asia's just been like just non-existent, nothing on the docket at all. But even so, with like US sessions and that, we haven't had a great deal sort of popping on. So let's just have a quick scan of it first. There we go. Thursday coming through here. So we got trade balance for Japan. Again, this isn't really something that's going to affect us a great deal. And that the one that we're looking here is employment change for Aussie. So previous 47.5, expectation 25. So an expected slowdown here. But if you look at all the expectations the last couple of times, this is going back to May. We've got 22 came in at 38th. They decided to put it up 30, 39. Back to 20, 20, 50, 20, 58, 26, 47. They drastically underestimated every single month. Look, eventually they'll get it right. Like eventually it'll come in at like, I don't know, 20, 15, who knows? But it'll come in around the expectation. I mean, the old sort of broken clock, right twice a day kind of thing is if you just keep spamming 20,000, well, yeah, eventually you may sort of get it right and give yourself a pat on the back, like that meme where the guy's on the stairs all the way down to the bottom cracking the wine or cracking the champagne, but he's on the very lowest level. You know what I mean? So, anyway, beside the point, that's what we're looking at here. A tick down in numbers here is going to be in the camp of, again, it always comes back to this sort of, what's the RBA or the central bank, in this case RBA's response going to be to these kind of numbers? What direction? Is it going to be more of a dovish response or is it going to be more of a hawkish response? Well, if the employment levels are dropping, well, we're going to sort of see the idea or the talk of, well, we need to sort of help, stimulate that along a little bit, which is obviously done by the way of cutting rates, which is negative for Aussie dollar. So it's an Aussie. So if this comes in negative, then obviously that'll be weak for the Aussie. Flip side of this is if it comes in hotter, it means well, even though the rates are still high relative, like you know what I mean, they haven't cut, and everybody else around the rest of the world, central banks, they're all cutting. Um, RBA is the only hawkish bank left. But, at the same time, our inflation is higher, much higher, twice the size, twice the level of a couple of these places. They're coming in like some of these people are getting in under 2% now. I think we had here. Yeah, I mean this was UK yesterday with the pound, 1.7%. You know what I mean? Like Canada, where are they at? I'm not sure which one you want to take here, the medium and trim. Either way, they're all in the 2% mark over here. You know what I mean? We're at 3.4%. So you can't compare us with them and say, oh, they're all cutting, why aren't we cutting? Because if you do, inflation isn't even really solved yet. Well, it's not even at an acceptable level. You haven't even had one print between 2 and 3%. I mean, they had that one dodgy one, but that was obviously the number was a bit muddied by the fact that there was a whole bunch of government subsidies for power. Really, the number was 3.4 or so. So that's where we're at. So, you know what I mean? Like the idea that sort of like we're going to be cutting, I still don't think it's going to be happening. But the thing is, the market will react to the number, and it's more in the camp of a weaker US dollar, sorry, a weaker Aussie dollar, based on the idea that it's a bit more of a dovish uh, print. We've also got the other one coming out at the same time, the unemployment number. And so they've said the talk of this has been, look, you know what, for us to cut rates, we need to see unemployment go up. And, again, you play these things out. If unemployment's going up, means people are struggling, means the economy's doing a little bit doing it a little bit tougher. That's the time that they would go, okay, well, maybe we need to act and relax the sort of rates a little bit, more of that kind of thing. Not like they're going to do it just because the unemployment rate ticks up a little bit, but it's a piece of the puzzle that you plug into place. And the thing is if this comes in at 4.2 or lower, well, that sort of is basically the idea of the talk is going to be that, well, even though the rates are at this level, we're not seeing unemployment going up, so it can't really be hurting people that much. I mean, it's hard to get a full picture of this stuff because every time you turn on the TV, they're crying about, people can't sort of like, I mean, this is almost a joke of that, but like, they're lighting candles instead of turning their lights on and all this kind of stuff. And I'm like, yeah, I don't know. I think that's a little bit sort of melodramatic, but whatever. Point is, if the number comes down, it's going to be bullish for Aussie. If the number's up, it's going to be weak for Aussie. And may as well, with that, sort of flip across onto the charts. I was going to start with gold, but may as well start with Aussie because Aussie is in a little bit of a dire strait at the moment. Obviously, we've been sort of seeing it sort of pull back, pull back, pull back, pull back. And this was a very crucial area here because remember back way, way when, which I've referenced a number of times, which I'm very well aware of because I got absolutely smashed, which I've also said a number of times. This period back here, over at the start of the year. Similar thing, sort of coming down, 68, 69 cents and that sort of came around here. Well, I got down to 66.40. This is our lower supports, which I'll sort of reference again in a moment. So we bang this across here and here. So we'll come back to that. But the idea is that, it came here, tried to rally, tried to rally, tried to rally, didn't do it, bang, and smacked down. So, if we flip to where we're at right now, come back over to here, we're seeing a similar sort of lot of price action. Let's clear a couple of these out. Delete this, so we can see a little bit better. All right, so same sort of thing, coming down. Not quite as dramatically steep sort of drop as it was last time, but tried to rally, tried to rally. We at least in this time put in a little bit of a push-up effort here. This is coming into Friday close last week, remember? So, it's not sort of too distant to memory. But this is off the idea that China was going to pump up a little bit more stimulus. That has not come through, and subsequently Aussie has continued to take a little bit of a bath. It held that 67 line a number of times through here, through here, through here, and then yesterday, dramatic fashion, boom, boom, drop down. A little bit of a bounce, and now we've retested the underside of this 67 line. So I think the fact that we've kind of like, this wasn't a full channel because, we came from down here, but it was a good enough sort of channel to sort of think that, look, it needed to hold here and rally and bounce back up off at the top here. And look, we were probably almost looking at our last little push anyway. 1, 2, 3, 4. This would have been our fifth. But it would have been decent to sort of see a little bit of a push up here. Failed to do so, and now it's broken down underneath here. I think this, and I put a little post on X earlier, but I think this changes the outlook of Aussie moving forward into the rest of the year, potentially. I mean, we're at, halfway through October. So there's only really 2 months of trading left, and then everything gets a little bit quiet for Christmas and all that. But, I think the fact that sort of like, we've come down, it really wanted to, or really should have, held this area here and got above and sort of broken back up here. It needed to do this to sort of see some sort of Aussie spirit still sort of kicking on. Failed to do so. Okay, so I think by this, I mean, it's broken down, it's retested, and it's come down. We're hitting 60s, which we know is generally a bit of a sort of a support area for Aussie. Let's just update this a little bit. Whoop. So we know that this is a bit of a 60s is always a bit of a reoccurring theme of a level with Aussie. But I think the fact that sort of like, we've broken these things, we've continued to come down. I mean, look, next support, as I said, I mentioned 2 seconds ago, 66.40. They were those 2 red lines that I put through here. So downside, I do believe, is somewhat limited, even with sort of like, say, as I mentioned before, say you get the higher employment, say you get the sort of the job numbers not as strong, and we do see a sell-off. I do believe, we're coming to a little bit of a sort of a potential sort of bottom area for medium term. But what I mean by sort of it's shifted towards the end of the year is that any rally up through here, I think because there was a lot of congestion through here, back and forth, back and forth, back and forth, back and forth, it is going to be a nightmare to get through this area over here. So my feeling is any sort of drive back up here is then just going to be sold back down like this. And that's given the idea that you do get up above here. I do believe, as I said, that we may see some pretty strong support around here. Look, if you go down underneath 66.40, you're going to see a lot of people crying about it all because it's very dramatic. push up and then push down. And this is like the proper lows over here, I suppose 66.20 down through this area over here, which we saw as that sort of pullback. Where was that? Sort of in September. But as I said, look, I do believe that we may be seeing a little bit of a broader sort of US dollar sell-off soon. Um, in saying that, it held its line and it's pushed right up at the moment. So, it's again, it's one of the things with the US dollar or DXY is, you know, it looks like it's about to fall over and then it jams up a little bit more. I've been saying this the last couple of weeks because this is how it is. When it gets moving, it is very hard to spin it around and flip it around. And this is why, Aussies continued to take a bit of a bath, even though Aussie's obviously not part of the DXY. It's US dollar broad buying across the board. Aussie's not, just because Aussie's not part of DXY doesn't mean it's immune to that. So, I think that sort of we may see some reprieve over the next week or two with US dollar. This, I believe, will give Aussie a little bit of a chance, and we'll see this because this is our big sort of falling resistance, which we can see through here. Well, I've already marked it out. Number of times this line through here has been sort of respected. So, a little bit of a breakthrough here, back test down here, maybe stuff around underneath 67 for a bit. And then maybe you can sort of push back up into here. But I do believe, because there was so much chopping and changing here, that any push up into here, people that, were trying to sort of catch this swing long, they'll just be saying, okay, that's fine. I'll just wait for it to come back up here and I'll just exit out and regroup for positions here. So I think it's going to be a very tough order for Aussie to get through 67.50. This level through here, I believe, will be capped. I mean, look, it could come, excuse me, could come all the way up here, get sold down. Could come into the middle of this big sort of congestion area, come here and then be sold down. It could just come up here and be sold down. But I do believe that we're going to have some sort of little reprieve, over the next week or so. I mean, look, we could, as I said, look, you got to consider both sides of the coin, and expectations are fairly flat on today's data. Well, actually, it's down on employment numbers and flat on unemployment. But, if you get, as I said, unemployment goes down, employment numbers also go down. Employment numbers up. Sorry, you have to think for a second there. Unemployment down, employment up. That'll be bullish for Aussie, and you may see a little bit of a cool off of this push down over here. Again, look, 67 is going to be one where people are going to react from. If you do happen to see that combined with DXY sell-off, that could get you back up, 67.20 or so. But I do think that things have kind of shifted for a little bit, and I think it's going to be a big order for Aussie to see move back up to here. Remember, we've got these levels. We've got sort of the yearly open here. We really sort of, put in a whole new sort of yearly high. Obviously, it looked like it was going okay. Unable to hold it and bang back down over here. So, look, moving forward, I think that's potentially sort of what I'm looking for Aussie. That's the broad thing. In the here and now, if we zoom right in on this, we can say, okay, look, these are the big levels. What about some little levels? So little levels here, as I said, with data coming out, they don't really respect levels so much with it all, but you've got it consolidating the lows here. A break above, 66.70, could see a little bit of a pushback up, and then you'd be looking at, say, maybe the body fill on this drop down over here at, say, 66.84. Look, the bounce yesterday was quite a good one, quite a dramatic one. I actually sort of went pretty heavy down here and sort of, took out most of my positions, and that sort of coming back up over the side over here. So, that there are some sort of either, there's probably more, sort of, well, these are short stops being hit, but then obviously people like myself trying to catch the bounce and that with it all, and maybe some other shorts sort of like taking profit as they sort of came back up through there. So I do think that, it's going to be a bit of a tough sort of gig for Aussie on the long side. And so, I mean, yesterday, as I said, I bought these lows here and sort of caught it up over here. I would have loved to have shorted Aussie up around 67, 67.10, 67.20. If we got up to these levels over here, I would have loved to have hammered some shorts, but we didn't get above 67. I think pretty much right on the dot. It's like, well, this wick just here, 67 right on the dot, and bang, they sold down since. So, you know what I mean? I didn't get any shorts off on this one here. So that's all right. We've got I knew that we had the data coming out today, and I think that's really a thing to watch in the short term for Aussie. But I think move above 67, 70. I think the levels you're going to be sort of running into some trouble are 66.85. Get above that, 67, high 90s, that kind of stuff. Get above 67.08. I guess the top of this kind of area here, this little sort of high time frame support, you could be looking up to the 26s or so. But, again, this is, if you've got the data to support you, you might be able to get this move up over here. But as it gets up into these sort of 67, 20s, 30s, I'll be looking to probably sort of short this thing and sort of try and play more of this idea of the range between 66.5 and 67, 67.20. All right, flip across. We look at metals because we had a big push last night and almost sort of got there. Look at this. Was it technically a high? 85. I know 85 was a high last time because I got right off at the very tip of it. So let's move you. Move you. There it is. 85. Is that spot on? To this is that. Look at that. Right there. And to last night. Jeez, go down to the wire. Pretty much. Look, half a cent or something. In something in a couple of $1,000. I think that's a pretty close call. Anyway, long story short, gold. Let's get those other parts of the chart back correct. There we go. Bang. All right, so gold. Jump on the 4-hour, get a bit of a better picture. We've got this large flag breakout that we've been playing, top side of. You can see backtest, little bit of a shakeout, gold fashion, and then ripped up to the top side. Now, we hit the very highs, as I just showed a second ago. Wasn't enough to go through. Now, it sold down. Not too bad, but sold down $20 or so for failure to go through. Coming into it very strong, got to the top there, and obviously unable to get through, so market de-risks a little bit. The reason I sort of emphasize that is because we had the same thing over here. If you remember a couple of weeks back, where are we? What's this? September. A little while back now, isn't it? These kind of periods through here, these were data points as well. So, you know what I mean? If we look at the dates, first, so you can tell this one's first Friday. So the date's down the bottom, 6th of September. That's a Friday, so that's NFP. And then I'm pretty sure this was CPI as well. But similar sort of thing, coming through really strong, moved up here, unable to break through. As I said, I've got it here, sellers. And because it was unable to break through, boom, sold down. There's a lot of the market that obviously they're buying this section. A lot of people will probably sort of add on in this section here and the idea that you're going to break out. It doesn't. They de-risk. They sort of sell down. Same thing happens again. Move. We had data, as I said, I think this is CPI. I'd have to double check, but CPI also, data moves up here, doesn't break out, sells down. This sell down, obviously a little bit less dramatic. And remember, I was going through this at the time. See, buyers are here, buyers are progressing it up, even though they're selling it down. The buyers are like, I'm not going to wait down here. They're sort of pushing up and obviously forced that breakout, which did come eventually. So where we're at here, not as dramatic a sell down, but the idea is still the same. Excuse me. Up above this level here, 72. You haven't got, that's the highest you've got any body closures. This 72 up to 80. That's an $8 close. That is a breakout. That is a breakout. Here's your back test. And then it goes for the continuation. Doesn't get it, so it sells off. It's just de-risking. It's like people take the position here. Obviously there's people positioning all the way through here, but there is a segment of the market, of course, as well, that is positioning around here for the idea that you're going to get the bang breakout and move up to our price targets, 67.40. I've seen other people do this move here. So if you put this on a daily, and they're calling this flag from down here, which, I guess you could. For me, I didn't, but, I guess if you put this here and put that up there like that, that gives you over 2,800. It's not my sort of choice of price target. I think sort of, this one here, I think 27.40, 27.30, 27.40 is a more realistic target. I do believe we're probably getting close to some sort of medium-term top in gold. Again, if it goes in line with what my feeling is about DXY, I think we have some, so pulling back on DXY, the flows will then sort of come, and you think about it, because the money's got to be somewhere. The money flows out of DXY, out of the US dollar, finds a home everywhere around. Part of that finds a home in gold, pushes gold. Because remember, the gold's right at the top here. Even though you've had DXY push up for the last week or 2 weeks or whatever it has been, gold is also still pushing at its highs. So if you sell off the US dollar, you've already got portions, you've got people buying this. What happens when you add all that extra sort of buying power from DXY selling off and people go, well, where am I going to park it? Yeah, they'll buy the euro, yeah, they'll buy the pound, all these kind of things, but they'll buy metals. And if you're already buying metals and then you add more sort of people buying in, well, that doubles your demand, doesn't it? And that'll give you your breakout. That's my sort of theory and thinking of this sort of move through here as to what will sort of lead us to a fundamental sort of breakout of gold. But if we do get the whole play with DXY selling off for a period, even a short period, a couple of weeks or whatever, we see this, you know, gold hits its price targets, DXY hits its retests, DXY US dollar sort of strengthens through the end of the year, then we see gold come back down to these lower levels over here, kind of thing. You know, I mean, that's just a random area, but the idea is generally the same, that we sort of like, push up and then we sort of see some medium term high as US dollar catches a bit more of a sustained bid to the top side. So I think 2740 is more of a reasonable target given that particular scenario to play out than 2800. 2800 I think is going to need a continued sell off of US dollar through the end of the year. So we'll have to see how that one plays out. So that's a broad idea of sort of metals and gold with it all. Back test, really, as you can see here, this is a breakout, failed to do it straight away, back test, board up, it's holding this area here. We take out the highs of yesterday, which, came in right on the dot, 85. You take out 85, that's going to see a bit of a breakout. It's funny, every time I've seen these breakouts more recently in that, I keep sort of thinking that we're going to see, if we go way, way, way back, history lesson status, something like this. I keep thinking that, we break the highs, we're going to see something like this, and through. Maybe that was just because that was the 2000s, and also that was a very big sort of like top over here going back to 20, you know what I mean? A lot of stops and that up around there. Maybe that's what gave us that big, massive run. That was that one where it went like sort of 50, $60 in like 15 minutes, and then obviously sold down through it all. But I keep thinking when we take out the highs, we're going to see some sort of dramatic fireworks, but doesn't really seem to happen. So look, this is on daily at the moment now. I've just flicked across. Certainly, if you take out that wick, that's the area that's going to go to the top side here. So I'll mark this out. I only had it on the dailies here. So these were the levels that we wanted to see. Obviously, as we can see here, which is the highs over here. We've reacted as we should have from there. You take out 85, I think it's okay. Game on with gold. I think we're going to see a push. Certainly 27 may see some reaction just because it is that big round number. But I wouldn't be surprised if we sort of get a bit of a continued here. Certainly the RSI is set up on a daily to support a little bit more of a move to the top side here. And again, I'm not a big sort of Elliott wave person, but here's one, here's two, put third leg up around here, pull back and fifth leg, so up to around that 2740. But I would say definitely sort of, you're probably looking about a 30, $40 move off a break of these highs before we see some sort of bit of a pullback. So maybe it's time to sort of hold a little bit of those if it does happen to sort of go through there. So again, back to that's the bigger picture. Back to what we're looking at now. Pretty much just as I said. Look, I think break 85, we go up. I think if you take out yesterday's wick, which actually sort of came in pretty much on the money of this spike high from Monday, what was that, Monday last week? Yeah, it must be Monday last week. No, that's just Monday now. Oh, geez, only a couple of days ago. Retest there, came there. You take out this high here. Well, then you're looking back down 58. If you want to hope that you hold 58. If you don't hold 58, you're coming back down, and we're looking at potential double top status there. I mean, double top is not fully in there until it goes underneath 26. But at the moment, it's certainly looking like it wants to push a little bit higher. All right, flip across. We got silver. Look, silver got so close to that measure move yesterday, and that's this is actually quite a good one because I've been playing long side for silver for a while here. Yesterday was here where we were doing the video, and I said, look, you got a little consolidation flag breaking through here, and it was just such a great trade the whole way through. Even this area here where I said yesterday in the videos, look, if once we take out this level, I had the alerts here. I said, look, add to your longs because we're going up to the next level. Pulled back, little retest, and then bang, bang. And when it went, bang, that shot up very quick, this candle here. Obviously, just almost just as quickly sold back down. Second effort up to the top side there, but it is stopping where we would expect it to stop. This is an area that we've got marked out here. So, you know what I mean? This is an area where we know that the markets are happy to sort of sell it. So it's not like, oh, geez, wow, we just lost steam for no particular reason. You've seen market sells it here all the way here. They sell, 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 sell. They sell it here. They sell it here. What's going to happen when they first come into it? It's the same thing that I say every day, that, it does go through straight away. This is the big move that I was saying, though. So if we go back and put it on the daily, this is the big move that I was saying that potentially we're lining up for a bigger breakout. This sort of little action through here. Bang, bang, bang. And this was the call down around here at 30. We're 107, we move 200 points or so, give or take a few from this low down here, coming up to this leg here. This is still our breakout line, our breakout area. You want to see a close up here. If we see gold run, it'll drag silver, no doubt, and we'll see a bit of a move up to the top side here. But yes, it's RSI on the daily. It's flattening a little bit, but it's not without its option to be able to sort of push up higher. You know what I mean? Like it's certainly it's coming off oversold. It just kissed the bottom line down here. It's still got a bit of gap. It's moving in the right direction. If this decides to go, RSI is looking good to support that move. And that's the thing. It's like none of this stuff's a guarantee. But you want to sort of stack as many of these sort of technical things in your favor as possible. So I think sort of like, another move back up again above the sort of the 61% line, this, 31.85, what are we at, 31.72 now. A move above this area, I think will sort of see you another test of this top area up here, where we know is the sell area. You can see it going back to earlier in the year, back in May. This is an area that's very crucial. It's been time and time and time again, an area where the market says, no, we're not going to let you go through quite yet. So you got to think when it goes through there, when it closes here, you close it daily, particularly higher time frame the better, but close it daily at 32.50. I would say obviously wick fill 33 or 20, 32.90, whatever. But I would say that's going to get you move up over here into the 34s. That's my feeling with it all. And I think sort of like with gold breaking out, we could see silver also get dragged. Complete your measured moves, and then maybe a bit more of a sort of back test, full test, like run through there. I mean, you work with that when you got it. But the here and now is, look, it does look like it's potentially able to do it. You would like to see these candles a little bit stronger. That's one thing that's not sort of massive for it. They are a little bit, but we're only a couple of hours, 2 hours, 3 hours into the day. So, it's plenty of time for this thing to move. We've got to see what they're going to do with DXY. All right, so speaking of DXY, going to wrap this up pretty quickly. Look, I mean, this has been overbought since the 8th. What are we at? 17th now, and just keeps going up, 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 up. And this is what I say about sort of DXY. This is what it does. It looks like it may sort of fall over, but then it doesn't, of course. So let's take these highs and these highs over here. To me, this is looking like it could come up to a little bit of wedge kind of thing. The alert set down here is still where we're looking at. Underneath 103.16, really underneath 103 would be the go. Whoops, let's not move that one. Let's move this. We're coming right up into this top area over here, the top wicks of back in like that first bounce high back in August. So this has been quite a push up through here. And this is my point with DXY, that, once it gets going, it keeps going. And there's a lot of things. You can see these drawings here. These are on the lower time frames. These are measure move after measure move after measure move. And I said, if you go back and you watch all the videos through that period, I would say, look, I wouldn't be jumping on the other side of this quite yet. because it can go. It can really go. And it broke through this falling resistance and it's kept going. Like honestly, around these areas over here, even I thought, okay, this is time for it to sort of chill out a little bit, and it's thought, no, bang, 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 a couple more levels higher in that. So this is on the daily. Get on to, this is 4 hour here. I mean, these are depending on how this goes. I mean, look, this could still jam up a little bit higher, but you look at little things like this, like from this high to this high over here, right? This is our Neg D one. Whoop. That push at the moment, look, this could still continue through and push up over here. But as it is at the moment, that is a negative divergence. It's on a 4 hour, which is a decent sort of level for it to sort of turn around. But I mean, it's not like you're trying to call the top on a 15 minute. Um, this could still go up. This red line, orange line up here is the 61%. But at the moment, we do have a little bit of a negative divergence forming on the 4 hour. As you can see, if we join all these highs together through here, this is a little bit of a wedge setting up as well. So these kind of things, it's coming into an area of previous highs. It's taken out anybody that was trying to sort of have their shorts associated with that. Bang, it's gone up, it's taken that out. I mean, look, even after I just sort of said, you don't want to stand in the way of this thing, it just keeps on powering forward. But I do maintain this. Geez, it's sort of like how many times can, broken clock thing, yeah? I do maintain this move coming, this angle, as to sort of whether it comes all the way back down here now. Well, that's hard to say. You need to update these things every time as well because we keep making new highs. All of a sudden it's quite a deep sort of pullback. But DXY isn't afraid of deep pullbacks. But if we do see gold and metals and flows go over there, and that'd be the perfect time. There's a lot of people that have got a little bit of profit sort of through this period through here. They've stopped out a lot of shorts. Maybe it's time for all the flows, all the profits that people made over here, jam it into something better. Jam it into gold as it's about to break out and sort of run into the mid 2700s. Seems like a plausible idea. As that happens, well, DXY sells off, gold moves up, gold hits its price target, DXY backtests these levels through here, and then sort of gold sells off and you see DXY move through to the end of the year. That's the kind of play that I'm sort of thinking that we may potentially see. So, that's, I mean, how I feel like, I mean, I haven't sort of shorted these areas here, but I do think that we may sort of see the corresponding US dollar weakness through these kind of periods over here. I'd like to get down underneath 103 would be a good area to sort of take out. Okay, fly along because we got Aussie data in a few minutes. We got copper. Copper making a little wedge through here. Seems pretty decent for us. Let's get rid of this one here. That one's already been explained. Look, a break above here, I think sort of in short term, if you can get above this level, this level just here, that's your little swing high for this period. And then potentially we're looking to come back up and test the top side here, maybe even close this gap over here would be a decent thing. Like we left that gap open. Remember when we had the big gap down? This one here, massive gap up. So that's gone closed. Bang, closed in very quickly. But this one's been left open for a little bit. So I'd say this is a bit of a magnet. You drag this across through here, around this kind of zone over here. 4-5, I think, is a decent area that we could be looking for. And again, look, if we see US dollar sell off, we may see a little bit of a reprieve in risk. And you may see these things pop up here a little bit higher as well. Finally, just tick across, we got China. China, like as I said, it was positioning, this point coming down through here was positioning for the idea that the PBOC were going to sort of pump in some more cash. Didn't happen, gapped up, ran boom, 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 jammed up a whole bunch of people in that. This is obviously what's added to the whole Aussie stress. Your levels now are just to get underneath those most recent highs, so down under 711. 711 should see a little bit of a sort of pullback down. Potentially, again, we haven't even closed this gap down here, 707. So this is an area that I'd be interested in if we can break 711. Yeah, there could be a little bit of support idea through here. Whoop, like this. Could be a bit of an idea of support through here. But I think mainly this is the area down here that we would see a bit more of a bounce. I think if anything, it come up here, bounce a little bit, and then come down to this bit over here. And this again goes in line with the idea that maybe you see a little bit of US dollar weakness. You may see a little bit of Aussie reprieve as Aussie comes down here, as the one comes down here. Aussie sort of has a little sort of failed rally attempt up into 67, 67.20, maybe, who knows, we'll see. And then, you see a bounce through here and US dollar strength through the rest of the year, as I keep sort of saying. This is the idea. This is the plan. You know what I mean? You got to have a plan and you got to just trade that plan. Be happy and able to sort of chop and change as see fit. But, this is the kind of thing of doing the cross chart confluence to sort of see how all these sort of flows may potentially be moving together. All right, we've got data in 6 minutes. That's it from me.